All right, now joining me in studio, this guy is the trifecta from finance to legal to real estate. Recently, he spoke on stage in front of over 2,000 of the real estate industry. He hosts his own radio show, here to talk about the HECM for Purchase, a niche product for the market. Michael Gaddis, good to have you on the show, man.
Yeah, thank you for having me.
Important topic.
It is an important
topic. I mean,
topic.
this is zeroing right in on something that is, we talk about the market and finance, but I mean, this is a very niche, unique product that exists for people. Explain it.
Well, reverse mortgages are becoming more and more popular because more and more people, because the baby boomers are turning 62 or older. In fact,
10,000 a day.
That's right, 10,000 a day. But reverse mortgages have that negative connotation to it. I was at an event recently, and somebody came up to my little booth and they said, "Oh, I don't like reverse mortgages." And I said, "Really?" And they said, "Yeah." They go, "I'm looking into the home equity conversion mortgage, not the reverse mortgage." I sort of, it's the same thing.
But isn't it the worst name?
It's the worst
name. Who wants
name.
to go in reverse in anything in life, right? You want to move forward, and that's what it can really do. I look at it as an opportunity, right? If you have equity, you can buy a second home, take cash out, no mortgage payment. But if you need a solution, have equity in your home, but no money to make the mortgage payment, it can be a solution. So it covers the whole spectrum.
It's one of the most flexible loan products on the market today, and it literally can change a person's life. It can literally do it. I've seen it, completely just change the direction of a person's life.
Give me an example of some people that you've been able to help with this financial
Well, let me give you an
instrument.
example. There's a lady who lives in Oceanside. She made $1,800 a month between Social Security and a small pension. Her mortgage payment was $1,100 a month. That did not include her property taxes, her insurance, her car payment, her utilities, her credit card bills, gas, anything. So she was basically subsidizing $900 a month out of her pocket, out of her savings every single month. When she came to see me, she was down to only $2,500, which is basically less than 3 months worth before she hit zero. And we were able to get her into a reverse mortgage, which eliminated that $1,100 a month payment, which allowed her to not have to subsidize anymore and allowed her to be able to stay in her house because she wasn't going to be able to do it.
Well, what's interesting is we have a retirement crisis in this country, but so many people have equity in their home. They're just cash poor, so to speak. So equity rich, cash poor, you've heard that expression. This allows you to leverage the equity in your home. It's designed under Reagan. It's a government-insured loan. You can live in your house till you're 200 years old. Are there any misconceptions? Is it right for everyone? Anything that anybody needs to know?
Well, I think basically what everyone needs to know is, one, it's geared towards people 62 years or older. They have to either own their house outright or they have to have a considerable amount of equity. One of the biggest myths about reverse mortgages is that you lose title to your home, which is absolutely not true. Title remains in your name or however you want to have it vested.
It's a refi.
That's right.
It's a strategic refinance.
It's a loan. That's what it is. But there, as with everything, there's a lot of benefits to reverse mortgages. Allowing you to stay in your home. One of my favorite benefits of the reverse mortgage is if you have establishing a line of credit that grows. Literally, versus a HELOC, you can establish a HELOC that can be frozen. It can be reduced. But with a line of credit through a reverse mortgage, it cannot be frozen, it cannot be reduced, and in fact, it grows by the amount of whatever interest rate is set in your note. So it's an incredible thing.
I've heard of people doing that as soon as they turn 62, even if they don't need it, because it can grow.
Absolutely, and if you need assisted living in the future, having the availability of that amount to keep growing and growing and growing until you do tap into it. Now, for just to be fair, it's only on the unused portion. So if you use a portion of it, you don't get the growth on the used portion, only on the unused portion of the line of credit.
I'm seeing it used on purchases as well.
It is. It's a great tool for purchases. People are able to leverage into their forever house, not have to worry about making a payment. And that's one of the things about living in California. So many people around here go, "It's so expensive. I just can't afford to live here," especially in retirement, which is where everybody wants to be. So by using that reverse mortgage purchase, the aspect of it, you can put yourself into your forever house on a golf course or wherever you want to be in a retirement village and not have to worry about making payments.
I want people to really think about it this way. Let's say you were buying a house and you had $500,000 cash, right? Which sure is a lot of money, but you're going to buy a house cash. Why do you buy a house cash? Because you want no mortgage payment. So you buy the house cash, now you own the home free and clear, no mortgage payment. You could buy $1 million house and still have no mortgage payment. You have the mortgage, but that accumulates. Now you have $1 million asset going up, no mortgage payment. And what would you rather live in, $1 million home or a $500,000 home?
Absolutely. The quality of life is great. Now, there are some considerations you need to make sure that when you take into consideration, you always have to weigh the the benefits versus the considerations in a reverse. And one of the things about a reverse you have to make sure is you're still responsible for your property taxes and insurance.
Yep.
And it is a loan. It's not. There's a lot of advertisement out there right now that's kind of insinuating it's a benefit of the government. It's not a benefit. It's a federally insured loan. Is what it is.
Well, you do workshops on this stuff. This is great information for us here today on a show called The American Dream, where we talked a lot about real estate. Learn it, know it. Visit Michael Gaddis online. Certainly go to his workshop. We are out of time. Gaddis, strong finish today. All right, that's all for today. Tomorrow at 10:30 a.m., Channel 4 for more of The American Dream. And of course, if you want to engage in the conversation, visit me online at craigsewing.com. See you tomorrow.